Welcome back to Trading 360. I'm Nicole Petalides. Thanks for being with us on this Monday. You see some up arrows here. Big three time. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Jessica Inskip, Director of Product and Education at Options Play. Good morning to you both. Jessica, your first trade here, the name you're looking at is Apple. We talked about earlier a buy rating today from Goldman Sachs. What are you thinking here?
Absolutely. So it's up 3% on the day on the back of that analyst upgrade from Goldman Sachs. And I do see Apple coming up to this really key resistance point around 157, 158. So can't wait to see Ben to go into the charts to understand that. But when that happens and we have those strong updates, it's a great time when there's that strong resistance to sell a credit call spread. So from a fundamental perspective, Apple was one of the main beneficiaries of those supply chain concerns and consumer demand with their very expensive iPhone, and some of that is subsiding. However, those macro headwinds still exist. So from that technical perspective, even with that analyst upgrade, I think a really great short-term trade here that I see is selling a bear call spread at that 160 level, capping my upside risk at 165. Overall, I'm collecting 30% of the width with a $500 risk altogether. Of course, we subtract the premium that we receive at about 130 from that. So it's a low risk trade coming up to resistance with a short-term stance on Apple.
Right. And I am going to ask you your big picture on the market, too, as we're hovering near some recent highs. But, Ben, as Goldman Sachs puts this 199 target, a buy rating on Apple today, and it has this move that Jessica is talking about today, what are your thoughts here?
Yeah, they're calling for something like another 30% to the upside. Nicole, good morning, guys. Well-defined trend environment to the upside, but nearing some areas of resistance that we saw last month around this 155 area, 157 area. Let's begin with the double bottom back in January around 124, 125. Well-defined trend environment, and then sideways consolidation. Now, last time we looked at Apple, I actually identified an area of consolidation that we had been forming. And let's just show you what it was. It was around this 153 area. We talked about potential weakness. If we did see some below 146 would be a concern for the bulls. We did see a pullback below that level, but follow-through was kind of limited. 144 is where we bottomed out and sort of worked our way back up. So a bit of a mess now after a really well-defined trend environment, but the bulls want to kind of look at this as a larger area of consolidation. So I went ahead and did that, and you can see if that's the case, you're looking at 151. But no matter how you slice it, we have been in a trend environment to the upside, and we've lost momentum to the upside after topping out, I mentioned in February, around 157, 158. So we've got a very well-defined area of consolidation. Again, we'll call it 157, 143. So Jessica's got her eye on a key area right now. If we can get a breakout, the bulls are going to see continuation of this pattern. If we roll over here, it's not good for the bulls. Let me show you why. When we take a look at the daily, again, here a trend up, but as we look at the daily time frame, let me show you a well-defined trend higher here, but look, we're at a key pivotal area, 155, the middle of a range we've been in, basically going back to, well, we'll call it the fall of last year when we topped out around 183. So lastly, I'll show you exactly where we stand in terms of the 50-day, the 200-day moving average. This move up has us above both of those key levels. It's got us up about 20% year to date. RSI is a little bit lackluster to the upside, so kind of supportive of the potential to roll over here. Notice these highs coincide, again, with the highs that we saw last fall. That's the next hurdle here to get up above this 155, 157 area, pivotal, a big area right now to keep an eye on.
Right, and as we've seen that move higher and the call for the high and the higher move from Goldman Sachs, the pressure still, we've been somewhat range bound, and that's what and you've showed us that many times, Ben, and that's what I wanted to ask Jessica too. I know you were talking about the supply chain pressures and that those still exist, and I just wanted to know your bigger picture. I mean, the NASDAQ had a winning week last week. It was up 2.5%. It's up to 11% year to date. But do you think we're somewhat range bound, and as we move to the higher end of the range, for example, the S&P's at the highest since mid-February, does that help to make your case for pulling back a little bit?
Absolutely. That's my overall market view from the macro perspective, is we are certainly range bound. I am eyeing 4,100 as our next short-term resistance. But prior to that, think about what defines a bear trend or a bull trend from the trend perspective. We're looking for higher lows and higher highs. So we need to overcome those previous lower highs and lower lows subsequently to really be in a solid bull market. So my really key resistance level that I'm watching is 43.25 from a technical perspective. And then additionally, just as our previous speaker was saying, it's that jobs data I'm really paying attention to. What is the Fed going to say? I love that narrative of, do we fight the tape or do we fight the Fed? We have to realize is from the tape perspective, there are a lot more retail traders than there used to be. And from a Fed perspective, there is a human really digesting that data and making decisions. So I really think it's a balance of both causing a range-bound market.
Right, understood. And you wrote that in your notes when you talked about Apple to us, even prior to the move today, that, it is coming up against some strong resistance around these levels. Now, Meta's a different story because of the focus on efficiency there and some of the revenue drivers. Tell me a little bit about Meta, which is around 189 today.
Absolutely. And I do think it's a time to look at tech as well, because their largest headwind, of course, was a strong dollar. And we've seen that trend come down. And if that's peaking, then that's absolutely positive for the overall tech sector, especially those with a global revenue exposure. Now, Meta was probably lost so much last year from a growth perspective. And that was because they had a huge investment within the metaverse. But Mark Zuckerberg came out and said he's driving efficiency and focusing on revenue. And so I wanted to see some steps of him going towards that before I would talk about purchasing this security, even though with the run up lately, with TikTok ban coming up within government discussions and Meta focusing on new revenue drivers. Twitter tried that. It seems it's doing seemingly well. Elon Musk told us he's at break even for Twitter for those driving efficiencies. So he's setting the trend that's certainly following with Meta. From a valuation perspective, they're trading at 19 times next year's earnings. They expect positive growth and EPS. And that is a good indication that it's still seemingly undervalued and perhaps a good buying standpoint. And additionally, on the last point, I love to look at relative charts as well. And this is showing a breakout versus the S&P 500, which Apple did not, which reiterates that bull case.
Yeah, I mean, and I'd like for Ben to take a look here as you're leaning to more of a bullish breakout here. Ben, your thoughts on the Meta chart?
Well, similar pattern in terms of what we were talking about with Apple, right? Nice run up, a little bit of a pullback, but the retracement that we saw in terms of Apple is a little bit more significant than what we saw in Meta, but in both cases forced us to kind of take a step back. Let's just begin with the trend environment to the upside, 88 to 197. We're going back from the beginning of November. You can see a high conviction move up in the beginning of last month, and then this was the area that we looked at last time we focused on Meta, and we identified an area consolidation that was, well, most recently forming around that 190 area. Here's the pullback that I mentioned, so a little bit of a dip, but notice we never took out the area that was established prior to the one that we were forming. So what I went ahead and did here, a similar situation, just kind of zoom out a little bit and establish just this kind of wider range area consolidation. We've got a pretty well-defined lower, pretty well-defined upper extreme, and it sort of feeds into our narrative of this bull trend that's been playing out. So again, sometimes it gets a little choppy and you have to take a step back. That's never a bad thing in terms of viewing price activity. I think always distancing yourself from the tick for tick is a good thing in my opinion, but let's do that. In fact, let's move away from the hourly chart and into the daily time frame, because here you can see the move that we just looked at, somewhat counter trend to the longer term move that had been coming into play. And then you can also see how it gets us back into an area of resistance from last summer, July, those August highs up around that 180, 200 range. But in a similar fashion here, I like to talk about how, well, we can establish trend environment based on these areas of consolidation on the way down, but you can also establish when we've invalidated. So in this instance, we formed 6 areas of consolidation into the lows last fall, but look what's happened since. We started to retrace those key areas that were established on the way down. So what I did here, again, just zooming out a little bit and establishing a wider range consolidation area that's forming, and that's why, again, we're testing a key area. Jessica mentioned the breakout, but follow through has been somewhat limited, but we have been in a bit of an uptrend, which we identified again on the hourly. So let's just see where things stand real quick in terms of the 50-day, the 200-day moving average, because Meta is above both of those closely watched moving averages. Look at this, year to date up 56%, which really speaks to the strength of the move that we've seen not only off the lows from last fall, 88, but the continuation that we saw this year. And again, testing key areas of resistance, as you can see that we saw last summer. So another stock that's in a big area right now, one to keep an eye on. Apple more the middle of the range. Meta, as you can see in this instance on the daily, a little bit more towards the upper extreme of the range. I'm sorry, I said it the wrong way. Apple versus Meta.
Yeah, no. And you said how it's reversing the trend that we had seen. And, you're always making great points, Ben, and thank you for that. And I think also another point that Jessica had made, as you said, tick for tick, I was thinking about TikTok and, the competitive landscape. And there's been a call for, those who work in government to take TikTok off the phones. And you think that big picture in the competitive environment, your thoughts, Jessica?
I think it's certainly interesting. I personally don't want to see TikTok go away. I love the algorithm, and I know there was a lot of government documents or talks even in Trump's time where there was some talks about moving it to the US, but you have to think about the contenders and then that competitive environment. When there is something that takes a large market share, then others, of course, are going to follow suit. So it's going to be interesting to see what the integration of AI is going to do with that social media space. But of course, beneficiaries are going to be Meta, YouTube Shorts. They have a similar revenue sharing model, even Pinterest or Snapchat. So a lot of the social space is very interesting, especially with that younger generation, as that's where they spend a lot of their time and ad dollars are derived from.
Yeah, and from the younger generation to maybe the older generation, from something that may go away that's not going away, Johnson & Johnson, you were talking about a lot of the, obviously, pharma products of Johnson & Johnson and a big picture of growth. Tell us about that.
Absolutely. So this is a defensive play here, and I do need to give credit where it's given. I got this trade idea from Tony Zhang, my colleague over at Options Play. But they have a focus on M&A with their executive management, and that's something that's proven to be really positive when you have those proven leaders coming into a company. Look at CRM's performance, for example. Now, they have oncology drugs within the pipeline, and that made a huge portion of their revenue. Now, if we have to be in consideration of COVID and their participation in that, if we even strip out COVID from their revenue drivers, they were up considerably year over year, which makes them a peak or interest from a fundamental perspective. Going into where they're trading 14 times next year's earnings. The S&P 500 is around 18, so anything under that is an indication that it's perhaps undervalued. They have positive 3% EPS and revenue growth that they're expected for next year as well. So again, indication of positive momentum. Those drugs in the pipeline certainly help add to that revenue story, suggesting that perhaps even more EPS or growth revenue is suspected. And then from a technical perspective, I would love to hear Ben's take on that, but seeing breakouts as well.
Right. All right. And we'll be talking more about TikTok and Meta and Snap. Kevin Green will be looking into that more closely. By the way, folks, I wanted to add that in there. Johnson & Johnson, Ben, final on the technicals.
Yeah, I'm excited about this one, Nicole, because we talked about Apple, how it's in the middle of the range right now, testing a key area, 155, 157. We talked about Meta testing the upper extreme of a range, but Johnson & Johnson's now testing the lower extreme of a range that we've been on the daily time frame. And this is a stock where you're going to see a complete different scenario than what we were talking about in terms of our first two names. Let's begin with the hourly. It's a trend lower, right? From 181 all the way down to the lows recently around 151. And here I just established a couple of the areas that I saw that my eye was drawn to in terms of areas of consolidation. And I don't want to get too ahead of myself here, but I wrote a question mark here. Is this an area 153 that we're starting to build around right now? But you can see migration of value to the downside. It's pretty well defined. Again, this chart goes all the way back to middle of December, and you can see a well-defined trend lower. So let's just step away from the hourly into the daily time frame. And here you can see the move we just looked at. We're talking about very much counter trend, right? And a blip on the radar relative to the longer-term trend that's been playing out. We're going all the way back to 2016, the summer of, when this stock was trading around 105, 110. And then you can see the areas of value that formed at higher and higher levels. Let's just go ahead and identify two of them, just to keep it real simple. 130 throughout, we're talking 2017 to the pandemic spike out of range. And then basically since then, 2021, we went sideways around 170 with an upper extreme 186 and a lower extreme around 150. And in fact, let's take a look at that, because I mentioned that we're testing this lower extreme right now. 151, it coincides with the lows that we saw back in the fall of and beginning of 2021 prior to this run up that we saw. And Here you can see again, just near that key area on the downside here. So it sounds like Jessica thinks we'll hold in this range. Let's just check on where things stand in terms of the 50, the 200-day moving average. Johnson & Johnson well below both. Also, you can see down 12% on the year. RSI, though, starting to inch up a little bit with some of the bid activity we've seen off the lows. So let's see if we start to reverse the trend here and work our way back into the middle of that range that we looked at on the bigger picture daily there.
Yeah, long list of drugs. I see one for prostate cancer tents there. I think that chart prior to this one really showed that we're right at that lower end of the range there, Ben. Final thoughts, Jessica, you brought us 3 great names today, Apple, Meta, and Johnson & Johnson, and this as we await to hear more from the Fed and jobs. Of course, Bostic last week gave a boost and a rally to the market when, Raphael Bostic's basically saying, I don't see the need for the 50 basis points at this point. That brought a little optimism, but what are you thinking here? What's your big picture for this week?
Yeah, so the big question that I have this week is that reacceleration that we saw in spending in January, is that softening? And some of the February data that came in is indication that perhaps it is, with manufacturing coming in a little lower. I'm paying attention to the jobs market. If we see moderation in job growth, perhaps that's the data that the Fed needs to justify the 25 bips rather than the 50.
Wonderful to see you both. Thank you, Jessica and Ben. Jessica Inskip, Director of Product and Education and Options Play, and our own Ben Lichtenstein on the charts. Thank you.